So let's talk about the dollar yen. Now, I know a lot of traders have been caught long on this pair. So let's have a look at realistically what's going on. This is the weekly chart. You can see the dollar yen has plummeted quite dramatically along with the dollar index, which we'll have a look at shortly. But we're approaching this, the 50% Fibonacci retracement level. But also, interestingly, on the weekly chart, and that's right from this bottom here, in 2020. So we had moved all the way up from 101 up to 150, a massive rally, the carry trade because of dollar strength, and particularly against the yen because of interest rate differentials. But have a look at this level where that Fibonacci lies, and it's right on top of this massive peak over here going back to 2015. So this is definitely a serious support area, and we're pretty close to it right now. It's also a much shorter term support area based on that level there. So it's definitely an area of serious interest and one that we should be looking at. There are a couple of other things on the dollar yen which are interesting that we need to be cognizant of, and I'm going to switch to the daily chart for that view. And you'll have seen, if you go to my Twitter and go and have a look at some of the other videos I've done, but you'll have seen, and I'm going to quickly draw it in for you right now so that you can see me drawing it. You can see that we've got this sort of long-term head and shoulders pattern, which is, and I'm going to draw it very roughly, kind of like that, and when I say head and shoulders, I mean potential head and shoulders, down to here, and then I'm going to draw this right shoulder in, which doesn't actually exist at the moment, but potentially is an interesting opportunity. Perhaps that's a little bit skew, something like that. Now, I would like to see a formation of this right-hand shoulder, or at least a move up to this level here at 135. This shoulder's at around 138 to 139. This area here, this potentially tiny intermediate head and shoulder, is at about 135. I'd like to see this pattern form before we can say we've got any overall direction in the dollar yen. I think overall this is going to have to move lower. But I think in line with a potential bounce in the dollar, we'll have a look at the dollar index shortly, we'll get some recovery in the dollar yen, and particularly because of the oversold nature of it on the daily and the weekly and the hourly and everything, we're looking at this level here. Now let's have a look more closely at where we are. You can see we've had this stair-step movement down, all the way down here, and we've had murmurings of potential interest rate hikes from Japan. We've had an allowance made for an interest rate hike, which hasn't happened yet, but it's there. And you can see just below us, we're at 127, 128, 127.50, I think was the low. And just below us, just about 100 pips below us, actually, it's not very far, is the support level that I was talking about earlier. So could we see the dollar yen drop down into the 126, 127, 126.50, maybe 126 region before we see an attempt to rally back up into some of these resistance areas? First one being at 133.80, and the next one being closer to 139, which would make a fantastic head and shoulders pattern potentially possible. I'd like to see that. That's the ideal view of it. I don't know if it's going to happen. Like I've often said before, currency charts are never perfect. They're never ideal. But this would be a beautiful setup. So I'm looking to buy dollar yen actually starting pretty soon, maybe even on Monday next week, which is the third week in January, but the second serious trading week. Perhaps we'll get the dollar yen just moving down a little bit further to the support level, and that's at around 126.20. I don't have my spectacles on. I'm just grimacing at my charts here. So 127, 126.50, 126 maybe before a bounce. Now, you've seen the stepwise movement down. So one step sideways, one step sideways, one step sideways. And now we're on the fourth step. So this is one step, two step, three steps, four steps, and potentially the final step in this move before we begin to move up. Major support area, major support area, not just because it's the 50% fib, not just because we've got an intermediate support in there, but if we look at the longer term picture on the weekly chart, you can see that at the very least, we should get a short-term bounce off this level here, which goes back to 2015 or 16 or thereabouts. So the dollar yen, bear in mind, is a currency pair that's comfortable in the 120 to 115 region. And I've been trading this pair for over 20 years, and I know how this pair moves. This region here, really going back, I don't know how far these charts go back, but we go back to 2009. This area here, kind of in the middle between 115 and 120, is where it feels comfortable. And it might be very tempting for the Bank of Japan not to raise interest rates because we've dropped so far down. Maybe they only have to talk about it and only murmur about it and not actually do it. So if that is the case, and we see more interest rate hikes in the US, in other words, higher interest rate, basically potentially higher dollar, and a rebound in the dollar index, we'll have a look at the dollar index shortly, then we might see this beginning to recover. If we get this beautiful head and shoulders pattern, this will be my trading strategy for the year in dollar yen. If we can get this, like I said, these patterns often don't work out beautifully and perfectly like we'd like them to, but a sort of a lopsided head and shoulder, because this low actually here is lower than that sort of neckline over there. It's potentially going to be a lopsided head and shoulders pattern, which could see something more like this. So we might not get up to 138, 139. We might only get up to something along these lines. And I'm not going to draw this perfectly accurately in right now, but you can kind of adjust for that 400 pips lower than that. So that's 139. Let's take off 400, 130, 135, somewhere around here. Perhaps this is what it's going to look like if I just leave that right shoulder there instead, making a lopsided head and shoulders rather than reaching right up. But something like that. That's what we're looking for. And if we can get that, if we can trade it long up into this region, somewhere in this region, we'll know more about it as we get closer. And then start to look to short dollar yen down into perhaps the second quarter or the second half of the year. Let's have a look at dollar index very quickly and see how that relates to the dollar index. And really what we've seen on the dollar index is a dramatic move down, very over sold on the dollar index. And I'm simply going off a couple of small things here. I want to put a Fibonacci in from the bottom to the top. And a lot of people will say, don't catch a falling knife. They've already said that to me about the other chart on natural gas. Go and have a look at that. The link's at the end of this video. But we're at this 50% Fibonacci retracement on the dollar index as well. Just below us, this is a weekly chart on the dollar index. Just below us, there's a support line over there. And if I draw in this horizontal line, you'll see where that is. And that's at about 101.50. Let's call it 101.50. Could be as low as 101.20, but I'm going to just cut the wick off the bottom there. It could be even closer to 100, but somewhere in this region, I expect the dollar index to bounce. It could be as soon as next week, and we should see this begin to rise up. We're awfully close to that right now. If we do get another little push down the dollar index, we could see another little push down in dollar yen, and that'll be the time to look to buy dollar yen and then perhaps start buying other currencies against the dollar. So let's zoom in a little bit to the daily chart. So there's that green line on the dollar index. So we're just holding above that fib level, not much, potentially a reversal candle, but nothing to bet your dollar on, really. That's just a hesitation candle. Some will say, well, that's a doji. Yeah, sure, it's a doji candle, but dojis are more often than not just hesitations, as you can see there, and various other places where we get doji candles. They don't mean a reversal in themselves. We'd like to see something a little bit more emphatic, and perhaps a little further probe down to 101, maybe even 100, before seeing the dollar begin to gain some strength. I don't think we can continue downwards so quickly, so rapidly. As I've said in my other videos, the dollar index tends to move in zigzag patterns. You'll see all along, as far back as you want to go. It doesn't move in a line continuously, and we've pretty much seen that since this top. Very little bouncing around retracement. I'd expect us to at least bounce back up to 105 on the dollar index, and perhaps even if you compare this chart to the dollar yen, a very similar pattern actually, and we could see a lopsided head and shoulders pattern forming here as well. And I'm just going to kind of draw this in roughly something like this on the dollar index. So it's not going to be a flat bottom head and shoulders, but it could be something slightly lopsided like this sort of thing, like that. So that's what we might see on the dollar index. Now let's go across and have a look at the commitment of traders, and this is really interesting. I've got the dollar index, and I've got this from barchart.com. I did subscribe to this, and I'm not subscribed anymore. It's actually not that expensive, and I think you can get most of the information from this for free. But you're going to be stuck with adverts popping up like you see here all the time, which is a little bit annoying. But you can get the bare bones of the information. There's a little bit of blurb, dollar under pressure, etc. Yen strengthens. You're going to see that most of this news that you see on commentaries is too old, too outdated, too retrospective. Basically, they tell you what's happened, not what is going to happen. Where you can see what might happen is by looking at the commitment of traders report, the COT report, which comes from the CFTC, and you can see on this is going back to dollar yen, not dollar index, but dollar yen commitment of traders. There's a pretty balanced view on this. We've got net long in the commercials, net long actually, which is surprising. The commercials believe that there's some strength due in dollar yen. The dealers are also net long, interestingly. So we've seen a growth, an increase in the net long positions in dealers. A little bit of a growth there, but not much. So more on the long side for both commercials and dealers and intermediaries. Leveraged funds are still biased short, but not by much. Actually, I'd say it's pretty much the same. Long and short are pretty much the same. You see an increase in shorts. It's because of momentum. You'll often see funds, particularly leverage funds and asset managers, will go with the momentum rather than trying to pick the changes in direction. Whereas the commercials tend to be a bit more savvy, commercials and the dealers and so on, they tend to be a bit more savvy and see when a change is due. And we see that they're already swinging net long. And then we get we've got asset managers who are, again, very balanced, which is unusual. So we're seeing the asset manager, we're not seeing any particular bias in the short direction. In fact, we're seeing, if anything, if you look at this in terms of the way it's normally balanced, we're seeing a bit of a long bias overall on the commitment of traders. So, which is unusual because normally with such momentum and movement, quick movement downwards, we see most of the traders and the funds going with the momentum. So let's go back and have a look at that chart one more time. Dollar yen, that's over here. I've got so many things on my watch list. So there we go. That's what I think is going to happen. We could get down to this level at 126. We're at 127 something now. I've already started to place small long positions on dollar yen. I think we might get a little bit lower. With a bit of luck, I'm going to pick up some more the lower we go. But if we don't get lower, I'm already in this a little bit, about a quarter of my normal commitment, and I'll be looking to add a bit more if we get lower. But I think we could see the movement back up to at least 135, 134 to form a lopsided right shoulder. And even, who knows what's going to happen this year with recession, interest rates, CPI, interest rate hikes or non-hikes in Japan, all sorts of things going on. We've got wars, we've got China back online, then offline, back. We've got basically turmoil in the financial markets, direction in stocks and indices are difficult. Commodities and things like this, dollar yen, I think pretty good to trade. Go and have a look at my report, which I put out yesterday, which has been super popular on natural gas. And then I've done one on sugar as well. I'm going to be looking to sell sugar. I'm buying natural gas, going long on natural gas. And at some stage in the next few weeks, I'm going to be looking to sell soya. I'll be doing a video on soya shortly. So that's dollar yen. Take care. Have a great trading week ahead. And good luck with all of that.